The research report we analyze today is based on the latest insights from UBS. Their base case is for a return to the production increase from April, but the pause could be extended. Oil price rally largely driven by higher risk premium, risk of pullback. Oil prices have rallied sharply year to date, and Brent is up nearly 20% at about $70 per barrel. UBS analysts attribute most of the increase to the tensions over Iran. Supply disruptions in Kazakhstan and in the U.S. because of the winter storm had also contributed earlier, but these are being addressed. They continue to think that if there were no impact on energy infrastructure in Iran and the broader region, prices would be at risk of a pullback, just as they saw in June-July 2025. A lower risk premium would likely persist, though, supporting prices as they discussed in their oil price update earlier this year. UBS analysts also note Gulf countries have said they would not allow the use of their airspace for strikes on Iran, link. In the absence of major disruption to oil exports from the region, they still see the spare capacity that OPEC Plus has as limiting the upside risk. The level of spare capacity within OPEC is only down slightly since last year. OPEC members still hold about 4 million barrels per day of spare capacity XCL. Iran, Venezuela, and close to 3 million barrels per day from Saudi Arabia and the UAE alone. Moreover, they believe the current oversupply in the market would absorb some of the impact. Strait of Hormuz closure, still low probability. The most material implication for the oil price would be any potential attempt to close the Strait of Hormuz, through which above 20 million barrels per day of oil. Figure 2 includes crude, condensate and oil products, and 20% of global LNG volumes transit. They continue to see such a development as low probability at this point, especially as long as Iranian oil exports are still flowing. In the case of a closure, they could be looking at a material disruption, potentially of a greater magnitude than the recent loss of Russian supply in 2022, which sent prices to above $120 per barrel, but this could be short-lived as the strait is reopened. OPEC Plus likely to maintain production increase pause at this weekend's meeting. Their base case is for a return to the production increase from April, but the pause could be extended. However, it should be noted that the views in the research report are for investment reference only. Market conditions are complex and volatile, and investment decisions should be made in light of your own risk tolerance.